You know, in the fast-paced world of global fashion, it takes a whole lot to really make waves. But when one of the industry's absolute biggest players sees its value just skyrocket overnight, you know something massive is going on. Today, we're going inside the surge of fast retailing to figure out not just how they pulled it off, but what it means for the future of the clothes we all wear. So you might not know the name fast retailing right off the top of your head, but I guarantee you know their brands. They're the global powerhouse behind the everywhere you look in UNIQLO, the trendy GU, and the more upscale Theory brand. Let's be clear, this is one of the most influential companies in the entire clothing industry. And that giant just sent a massive shockwave through the market. Right after their latest financial report dropped, their stock price jumped by nearly 12% in a single day. Now, for a company this huge, a gain like that isn't just good, it's a seismic event. That 12% jump had an enormous impact. It was enough to catapult fast retailing's market cap, making them the third most valuable company in all of Japan. This wasn't just a good day for their stock, it was a fundamental shakeup of the entire corporate landscape. So what on earth could be in a financial report to trigger such an explosive reaction? To really understand the frenzy, we've got to look at the numbers that lit the fuse. And wow, the numbers really do speak for themselves. The company posted a record-breaking performance. Revenues soared to over 2 trillion yen in just the first half of the year. That's up almost 15%. But the real story, the headline grabber, is the profit. Operating profit exploded by an astonishing 32%. These aren't just strong figures. These are the kind of results that completely reset what the market expects. Right. Results like these don't just materialize out of thin air. To get to the bottom of this incredible momentum, we need to pop the hood and look at the engine that's powering fast retailing's growth. And that engine has a very, very familiar name. Okay, so this breakdown of where the money's coming from reveals a really crucial shift in how the company is built. UNIQLO's international business has officially become the dominant force, now making up over 60% of their total revenue. The home business in Japan, while it's still huge, is now way smaller than its global operations. This really signals a new era for the brand. And this is where the story gets even more compelling. Not only is UNIQLO International the biggest piece of the pie, it's also growing more than 3 times faster than the business back in Japan. I mean, a 22.4% growth rate in your biggest market, that is a powerful, powerful formula for success, and it is crystal clear that this is the undisputed engine of their growth. And we're not just talking about success in 1 or 2 places. We're seeing powerful double-digit growth all across North America and Europe. And that's driven by both their seasonal stuff and their core year-round items. That same momentum is happening in Southeast Asia, India, and Australia. And even in a super competitive market like mainland China, they've managed to pull off double-digit profit growth. It just proves how much their simple, high-quality basics appeal to everyone. Now, all this international success doesn't mean the home market is any less important. UNIQLO Japan is still providing a super stable foundation, with consistent revenue growth and a really healthy jump in same-store sales. That strength at home is what gives them the stability to be so aggressive with their expansion around the world. So while UNIQLO is clearly the star of the show, fast retailing's portfolio is a lot more diverse than that. To get the whole picture of how the company's doing, we need to check in on the rest of the brand family. And it turns out, UNIQLO isn't the only brand delivering awesome results. The GU brand, which is more dialed into those fast-moving fashion trends, saw its profits surge by over 20%. They did this by being smarter with their operations, like cutting back on discounts, and really focusing on their core products that are a huge hit with younger shoppers looking for style that doesn't break the bank. But it's not all good news across the entire portfolio. The global brand segment, which includes Theory, actually reported a loss. And this downturn is mainly because of challenges the Theory brand is facing, especially over in the United States market. This contrast inside the company is really telling. On one hand, you've got GU just killing it, with a 20% profit jump thanks to smart changes. On the other hand, the global brand segment is really struggling, mostly because of a weak wholesale business for Theory in the US, as department stores have a tough time. It really highlights the company's strengths and the areas that need some serious strategic focus. But to really, truly understand the long-term vision behind these numbers, we have to look beyond just the bottom line. Fast Reeling's success is deeply connected to its core philosophy and a really strong commitment to sustainability, which, as we know, is becoming more and more important to customers and investors. At the very heart of their brand is this idea they call lifewear. It's a philosophy that's pretty much the exact opposite of disposable fast fashion. Instead, they focus on making high-quality, durable, and thoughtfully designed clothes for everyday life. The goal is simple: make their customers' lives better through their products. And this commitment to making things better goes way beyond their products and into their environmental responsibilities. The company sets some really ambitious sustainability goals, and as the latest data shows, they're not just hitting those targets, they're blowing right past them. So back in 2019, they set this incredibly audacious target: a 90% reduction in greenhouse gas emissions from their own stores and offices. This was a bold, bold move with a deadline of 2030, a goal that a lot of people in the industry thought was, well, maybe a little too ambitious. Well, get this. In a pretty remarkable turn of events, they've just announced they hit that 90% reduction goal in fiscal year 2025. They met their 2030 target a full 4 years ahead of schedule. That is a real, tangible demonstration of how serious they are about their environmental promises, and it sets a whole new bar for the industry. And this commitment to sustainability is pretty comprehensive. They've also hit their goal of sourcing 100% of their cotton from more responsible suppliers. And these efforts are getting noticed. The company now ranks second in the apparel industry for human rights and fourth for their inclusive marketing. This shows they're taking a holistic approach to being a responsible company. Okay, so with record profits and a proven commitment to sustainability, fast retailing is in an incredible position of strength. So how did they plan to build on all this momentum? Let's take a look at their ambitious blueprint for the future. Their strategy is built on 6 core pillars, and it covers everything from developing talent and sustainability to global diversification. This isn't just some corporate checklist. It's a direct response to the market. And notice, the plan directly addresses the weaknesses we talked about, with a clear focus on expanding GU and the other global brands. It also shows they're paying attention to the economy, with a pillar dedicated to reforming costs. This is a really comprehensive and strategically smart plan for growth. So, let's just recap. We have a company with its core business growing at over 20%, a proven leadership position in sustainability, and a clear, forward-thinking strategic plan. All of this comes together to create an incredibly formidable force in the global apparel market. It really raises the ultimate question. With this kind of momentum and this level of strategic clarity, can anyone truly challenge the dominance of this lifewear giant?